Hi, I'm Mary Barella Cordova with Remax Revolution, and today we're doing our second part in the series, Home Loans 101. My guest today is Mike Cordova with Modern Mortgage Express. Oh my goodness. How are you today?
I'm great. This is the second part in our series. We're going to delve into more of the different types of loans that are available for home loan buyers.
Well, there you go. Mike's our expert, so go for it, Mike.
Let's talk about the traditional loan types. We've got conventional, we've got FHA, and we've got VA. Conventional is the loan type that we typically recommend. It's for people with higher credit scores. The nice thing about conventional loans is you can get in for as little as 3%.
When you say when you can get in, what does that mean for as little 3%?
It means that you can buy a house with a down payment as low as 3%.
Oh, 3% down, I see.
Right. So that's great because, in the old days, it took a lot more. So one of the advantages or one of the issues with 3% is you have mortgage insurance. So if you put 20% down on a conventional loan, you don't have mortgage insurance.
And why is that a benefit?
Well, it's a lower cost to the borrower. So ideally, conventional loan, 20% down. That's what we hope our people can do.
So you're saying that's the best loan, they get the best interest rate and the smallest payment when they put 20% down.
Right.
Okay.
Right.
So that's an option for some people. Other people put 3% down, which is a little more typical. And what does that mean?
It just means that they have a little bit higher homeowners' mortgage interest rate.
Okay, so the rate's a little bit higher and their payment's a little bit higher because they're financing more, correct?
Right. The second option is an FHA loan. If your credit score is a little bit less, or you have a little bit more debt, you can get an FHA loan. And an FHA loan is great because interest rates are pretty good, and you just have to pay a little bit more upfront mortgage insurance with an FHA loan.
So you're saying that an FHA loan is easier to get?
It is easier to get.
Okay.
Yeah.
So there's different types of mortgages. Everybody's different. Everybody's unique. Mike's your loan officer, AJ, Bill, whoever you're working with at Modern Mortgage Express is going to show you the options you have because everybody's unique. It's not the same loan for every person.
Right. The other thing is if you're a veteran who was not dishonorably discharged, you can get a VA loan. And the advantage of a VA loan, one is interest rates are really low for VA loans, and also you can get in with a zero down payment, which is fantastic.
That's a huge benefit.
Yeah,
huge benefit.
And you don't have mortgage insurance with a VA loan.
Oh, well, that's the best. No money down and no mortgage insurance.
Well, there's an upfront charge called a funding fee that kind of is a little bit of mortgage insurance.
But there's always something.
There's always something.
And Mike's going to make sure you understand how that works so that there is no surprises.
Right.
Okay.
So those are the traditional loans. Because we're a mortgage broker, we have access to non-traditional loans as well. And those are things like bank statement loans for self-employed borrowers.
Someone like me.
Yeah, who don't show that much on their tax returns, but actually make a pretty decent amount of money.
So you can do a loan for somebody. We have a lot of people that we recommend or refer to, our buyers and sellers, that do furnace work, they do boiler work, they do roofs, they do remodels. Those people are employed as their own company. So those people you would be able to help get a loan even though they're not a traditional borrower. Is that what you're saying?
Yes.
Okay.
So we have, in addition to that, we have investor loans for people that potentially want to do fix and flips. Those are shorter term loans. Okay. And their interest rates are higher, but they're not as high as what a normal fix and flipper would pay to a hard money lender. They don't have the same high fees and high rates that you would typically pay.
So what if I had a buyer that wanted to buy a house that needed a little bit of work, but they were still going to live there, but only for a year? They definitely see that the market is increasing and they have an opportunity to make a profit in a year. Would that be one of the types of loans you're talking about here?
Well, no, that would be, so there's other things that they could do. Like there's an FHA 203K loan that provides money to fix up a property.
Okay, so that's an option.
So yeah, there's a number of different things, and ideally you talk to me or one of our other lenders, and we can discuss your situation and come up with a plan that works best for you.
Right, and that's the most important thing, is the loan officer is supposed to listen to you, ask you good questions, and then remember, you have work to do. You're going to have to send paperwork into them. They're going to need to have job stubs. They're going to need to have your taxes from the last 2 years. They're going to need to have bank statements. If there was a divorce and there's a divorce decree, they're going to need that. And that's because the underwriters, the people giving you the money, have to make sure that everything you were telling them is for real. And then then they know, hey, this is a piece of cake. We'll give you the money. You're not too high of a risk. So it's very important to know that you got work to do. It's not just Mike or AJ or Bill. It's your work too.
The other thing that I wanted to talk about is refinances, which is a really big deal right now because interest rates are so incredibly low, the lowest that we've seen in decades. So if you have a situation where your interest rate is, say, above 4%, right, it's a good time to talk to us, and we can, figure out a way to lower that monthly payment or even shorten the term of your loan.
Okay.
We can also say you need cash out for paying off other debt.
Maybe some remodeling. Right now, so many people are staying in their homes because of COVID. I know a lot of people that are contacting Mike at Motto Mortgage and saying, hey, we've talked about doing our bathrooms for years. And now that the kids are home 24/7 and we're teaching school at home, we really want to do that work now. And we know we have equity in our house. So then Mike's going to look at that, do the paperwork. Our client is going to get the information to him, and he'll be able to give him a loan.
Right. So very important right now, especially if you have an interest rate that's above 4%. So give us a call. We can figure out how to make your life better by lowering your monthly payment.
Please make sure that you click like, subscribe, and the bell notification. Share it with everybody. You can always reach Mike at 720-323-5662, and he'd be happy to send you an online application. Everything is digital, and he makes it as easy as possible. And he has the most integrity in the world. Believe me, I should know after all these wonderful years of marriage. So thank you, be well, and have an amazing day.